Welcome everyone to Fibonacci Retracement and Extensions 103. I'm Darren Maddox, and today we will learn to build Confluence with Fibonacci retracement and extension tools, increasing the accuracy of your technical analysis. Remember, we are building the foundations for a full strategy that will enable you to execute it with confidence. These techniques are not strategies on their own. Our goal is to identify areas of strong confluence where price action like reversals may take place, areas that strengthen the probability of your trading signals working out. Once these areas are reached, you know to be on alert. But remember, traders are in the business of being wrong. You are going to be wrong a lot, but with risk management strategy and the law of large numbers on your side, this won't matter in the long run. So get used to it sooner rather than later. It's a hot day. Let's open up our analysis apps and follow along with me. I'll be using TradingView on the Euro US dollar daily. Now, I've blanked some out here just so we can demonstrate. Let's identify some high volume nodes first. Okay, we've got some over here where this always look left, remember, so you see this peak happening here. We look left, see where the cluster is that it's getting stuck in. This high volume node cluster right here should act as resistance. We have another one here. Price came up, came back, found support. Showing volume in that area, that little cluster there. We're not worrying too much about super precision right now. I've also got the 200 EMA on here, which is this purple line. This is another area I'll get into later. Okay, we can look at this one here. Another area of support found on a temporary pullback. And if you look left, you can see the cluster here. Now, we've identified our high volume nodes. Let's add on our Fibonacci retracement tool first of all. Bada bing, bada boom. Let's have a look. Now, areas of confluence. Where does everything align? High volume node, strong move up. Now we're looking for a pullback area. 0.382 Fibonacci retracement is a common area. In that same area or roundabouts, we have the high volume node where you expect price to come like a magnet, and the 200 EMA, which is like another magnet for price. Down here you've got the golden ratio of this move, another possibility, and high volume node 0.5 fib here, which is another possibility. Let's see what happens. Price comes back, tests that area precisely 3 times, finds support and continues onwards. Now if you wait patiently for that trade set up, you wait for the swing below, and you've got a pretty decent trade there, straight back into that high volume node resistance. Let's say you buy the bottom for a 5.9 RR. Let's continue onwards. Now we've got a new high, so let's extend our fibs up there just a little bit. Or we can look again, 0.236 fib, 200 EMA, find support once again, straight into that high volume node. You could have took this one as well using an EMA bounce strategy for another 3 point odd RR. We're following our trend upwards with the fibs. This structure's starting to look more complete now. Notice that the golden ratio is catching up to this high volume node here. Price comes back and lose the 200 EMA, close below, hinting that it's in a bear trend. And you hit the high volume node again. Another chance for you to long on your signal in that area. Just keep playing this range over and over. Hits the high volume node resistance, another 4.48 RR. The point here really being that you've identified a wave. Usually you have to wait for something impulsive to happen so that you can get your high volume nodes and measures on, and then you're able to play all the price action that happens after. Let's tighten this up a bit to see what happens. Get rid of this now. You can see the wave high is still in, so we keep the same Fibonacci retracement tool on. Ultimately, price comes back to the golden pocket at the high volume node, while RSI is printing bullish divergence. These are the kind of confluences you're looking for very high probability trades, reversal patterns. This could bag you. You would go long. I would personally go long on the bullish structure break here. Nearly takes you out on this little pullback, but it doesn't, because you've got your stop loss below the high volume node, and you can just hold this one. Because you've identified a reversal pattern rather than a range. So you're not just taking profit. You can identify the high probability area of reversal on whatever asset is you want. Buy in as an investor at these levels. But as a trader, you don't want to just go buying in, catching a falling knife, they call it. You want to make sure price is actually finding support, and then your signal gets set up. Take that high probability trade and set your targets. Now, why don't you want to be just bidding as a trader? Well, traders want to be in and out of a trade as quickly as possible, keeping our capital liquid and draw down to a minimum. This can avoid stress and revenge trading and all that kind of things taught in the risk management course. Price can of course just fall. Just let me get the arrow up. Price can of course come back and just fall straight through one of these and not find any support depending on market conditions, and you do not want to be bidding that trade, not knowing where to put your stop loss, and price just comes down without you liquidated. Now, if you don't know what high volume nodes are, I encourage you to check out the high volume node series so you can learn how to draw your own. Now, we can use our Fibonacci extension tool to identify confluence and take profit areas as well. Let's measure this wave, for example, top to bottom, and then the swing nested wave. You can see here the 1.618 aligning with the 200 EMA and the cluster, and that may be a good area where price gets stuck. Maybe you want to take partial profits, maybe you want to take all your profits there. Price does find resistance but ultimately continues through, bringing up the next fib extension targets. And we can extend them for the following wave there with the bottom of that one, and you can see again the 1618 acting as support along the 200 EMA. Let's find another one. These aren't brilliant on this chart, but it's just for demonstration purposes. Top of the wave, bottom of the wave. Got another cluster fan, the 1.618 and 2. And this wave extends all the way to the 4.326. So again, combining them with your RSI, combining them with your EMAs, which I'll be doing the next video series on, combining them with your high volume nodes, find as much confluence as you can in each area. That's your high probability take profit, stop loss, targets, reversals, whatever it is you're looking for. Bring all those things together. The idea being each area of confluence you can find, more confluence you can find, then the higher probability that your analysis is correct and that your signal will work out. Often this comes with unbridled patience, of course, waiting for price to come to you, not trading the fake outs, which comes with experience. Maybe you wait for DEMA crosses at these levels. Maybe you wait for bullish or bearish divergence in your favorite oscillators. Maybe you wait for an event like a large volume candle where price leaves a long lower wick as your signal for reversals to take place. Whatever it is. Now, I will be going through all of this in future videos as we bring these tools together, and I will also be covering actual trading strategies once this is complete. One thing I wanted to touch on was Elliot wave. Now, Elliot wave is long, it's a complex topic and needs lots of study and practice and understanding, but Fibs play a huge part in the rules of Elliot wave. Just so you can get a general idea, wave 4, for example, cannot go below the 0.5 Fibonacci retracement and has a high probability of ending at 0.382 or 0.236, while wave 2 usually extends to the golden pocket but can go all the way to your swing low as long as it doesn't break it. On the flip side, wave 3 has a minimum extension of 1.618, and corrective waves like C tend to have a 1-to-1 Fibonacci ratio with wave A. It's a lot of jargon, I understand, but these people use these to identify what phase in business cycles they're in, or what phase in the trend they're in, as they trend moving waves, and that way they know they can adapt their targets, adapt their stop losses, and increase their expectations of their analysis playing out. Finally, you can do some fib overlapping. For example, we've got this larger degree wave, bearish wave here. Let's see what happens when we measure that. And we can see price finds resistance directly into the golden pocket of that wave. And if you're not sure which way the new trend is going up or down, then you can look for some additional confluence with the fibs. Let's measure our fib extension tool, for example, the way we did before, here to here, and we can see that the 2.618 sits right in the golden pocket there. So that might be a good idea for you to take partial profits. You don't know if the trend is going to continue up, you don't know if the trend is going to continue down, but there is confluence with the fibs here. So that's another way you can find high probability areas identified. And now that we know how to find confluence, we can add a few more tools to our belt and begin to form a trading strategy. Please watch the final video on market psychology with Fibs, as understanding this gives you a further degree of control. And as always, practice makes perfect, so open up some charts and start combining your favorite indicators with Fibonacci to identify high areas of confluence. Don't forget to subscribe, as this really helps me out, and leave a comment or any questions below. Safe trading.